Alright, so in this video I will teach you about my entry strategy, and I'm going to be referring to all the things that I have taught in the previous video. So if you haven't seen the previous video, I will advise that you go see those videos, because it is, step upon step, so that when I'm making some explanation or analysis, you won't be confused of why did I do that. Alright, so here what I'm going to do is, since the market is recent here, I'm just going to mark some zones. Alright, so we are going to start from, we are going to start from here. Alright, this is our liquidity sweep. We have a liquidity sweep here. Alright, and this is type A liquidity sweep. I have a video on liquidity, and I explain the two types of liquidity that we have. We have the type A and the type B. So this is our minor break of structure, all right, and then this is our major break of structure. And anytime we have minor or type A liquidity sweep, and then price close below the swing, this is the swing low. So anytime we have type A liquidity sweep in this case, and price close below this swing low that we have here, it is a very strong change of character, or it is a valid change of character. Okay, so this is our change of character. And what we have here is our inducement. Okay, is our inducement. I also explained in the previous videos, about the types of inducement that we have. So this is another inducement. Okay, so this this change of character created two inducement. You understand? Now this point, all right, is a point where we can actually look for an entry, where is a point of interest in the future, because we are looking for price to take this level out to induce this level, and it did just that. So we are going to start with this. All right, and we as we all know that your entry should not just be from anywhere in the market, it should be from point of interest. And I explained point of interest in the previous video as the point of your order flow, the order flow that breaks structure or cause a change of character. All right, and your order block that cause a change of character or break structure. Those are your point of interest. So if you have not seen that video, go and watch it. So we have another block here. Okay, this is our order block. So I'll just extend that into the future. Now, because this is my inducement, I'm expecting that price will take it out here. So this is not a panic for me. This is actually a good news for me, because that's what I'm waiting for price to take it out. So this is going to be my order block, and it has fair value gap. You can see from here to this level, it created the fair value gap. All right, so now when price is pushing to the upside, what I will do is I will move from 4 hours, I will go to a 15-minute time frame. And then in my 15-minute time frame, because the overall direction of the trend is down, right, and when the inducement is created, right, price push to the downside to create that inducement. So when price push to the downside to create the inducement, is going to push up to take out the inducement that it created, and that is what is happening here. All right, so it created the inducement, it created the inducement, and then it's pushing up. All right, as you can see, it's pushing up. So my POI is this level here, and this is where I'll be looking for change of character. All right, I won't look for change of character before the POI, before this other block that I mark. So I'll be looking for change of character in the zone. Okay, I'll be looking for change of character here. Okay, so now this is the last low that caused this break of structure, and then this is also the low. This is another low. Can you see that? That caused this low caused this break of structure. Can you see that? And then we have okay, this low here didn't cause a break of structure because price didn't close above this line. All right, so this now is going to be our change of character because price closed below it. Okay, so now the price has now rearranged itself to the overall trend, which is bearish. Remember, from 4 hours it is bearish. This is our inducement level. Okay, so now let's call this our liquidity sweep. Okay, there is a sweep there. So now what I'm going to look for here is that when I have seen my change of character, I will look for the order flow that caused this change of character. And the order flow that caused this change of character is here. This is it here. This is the order flow. This is the order flow. This pullback here is the order flow. Okay, I have videos on order flow. Please go and see it if you haven't, so that you can know the reason why this is my order flow. I explain, you know, in the video your order flow. So this is our order flow on lower time frame. Okay, now inside my order flow, I'm going to check, do I have order block? You know that this line here, this color here, is the order block from the first inducement. So when price came back here, right, it caused a change of character, and what caused a change of character is this order flow here. So I will check if this order flow has an order block. This order flow does not have an order block. Okay, the candles above this order flow, do we have any candle that has order block? No, like our kind of order block. Okay, this is actually an order block. Okay, but it does not have fair value gap. Do you understand that? So this is actually an order block, a very good order block. It doesn't fit into all the criteria of my own order block. So because of that, and because I don't have order block here, I will be trading as soon as price tap into this order book. So that means I'll place my sell limit, right? I'll place my sell limit here, right into this order book. Place it here, okay? Place it there, and then my stop loss will be above the order flow. You understand? Not above this order block that we have here, but above the order flow. So my stop loss will be just above it here, okay? And then I will extend this to 1:5 or 1:3. If you want to be conservative, you can do 1:3. But if you are trading a Profem account, you can actually risk 2% in one trade and make your entry if you are sure or confident about this, entry model. So I just prefer 1:5. All right. So as you can see here, price continue to push to the downside. Do we have 1:5? Yes, we now have 1:5. All right, we now have exactly 1:5. As you can see, risk to reward ratio 1:5. So that is the entry model. Okay, you identify your POI, your POI can be either order flow or order block from 4 hours time frame. Then you go to 15-minute time frame like I did here, and you look for change of character. So when that change of character happens, you look for the order flow that caused the change of character. All right, and if that order flow has order block, you trade from the order block. But if it doesn't have order block, you trade from the order flow. And this one doesn't have order block, so we traded from the order flow. Okay, so let's go back to 4 hours now. So so we have done this, right? We have done this because that's the, let me see, yes, we have done this. Okay, so price still dropped to the downside. And if you look at here also, we have, this is also a very good low or liquidity sweep. Okay, liquidity sweep. You can see that all this level was swept by this. Okay, and then when that happens, now I have explained about market structure, break of structure, analyzing the market. Okay, so all I'm doing here is just to look for entry where I can explain the entry model. So I have explained all of these things here in the previous video that I did. So here we have something here. Okay, but before I explain this, or let me just quickly explain this, then I'll move to the next one. All right, so around this liquidity sweep, okay, around this liquidity sweep, you will see that we have this candle here, this order block, but this order block was mitigated by this candle. You can see it's close below the low of the order block. However, we can still mark it, okay, but we'll just be cautious when we want to trade from that position. Okay, and when you are trading like this, you should not just take your entry anytime it gets into the order block from 4 hours. You should use the entry model that I'm explaining now. It's going to help you to maximize your trade. All right, this order block, the reason why I'm using it is because it has liquidity sweep, all right, it has fair value gap. Okay, the only thing that disqualify it is this sweep of this order block here, so it makes it weak. So now, since I have my POI on 4 hours, you can see that I'm marking my POI on a very strong level where there is liquidity sweep. Okay, so when you do that, your entry will be very, very strong. So I'll go to 15-minute time frame. So on 15-minute time frame, my interest is on the level that I marked. So I will just be watching for the behavior of market in that area. Okay, so we are not making entry immediately price get here. All right, so what are we looking for? We are looking for change of character. So just like I said, because that order block was mitigated by the next candle after it, you can see that it was easily penetrated. It penetrated it, and then we have a break of structure here because the price is bearish. And then do we have any other break of structure? No. So this is going to be our swing high, and the swing high turned to what? To change of character because price closed above it. So now I am interested in the market. Okay, so we have so we now have to look for the order flow. Okay, So my order flow, this is going to be my order flow. All right, that's my order flow. So let's mark it, order flow on lower time frame. This is from 4 hours, so this is our order block that has fair value gap from 4 hours. Okay, this is also a very strong order block. So the next thing now is, in my order flow, do I have order block? You know that the first example that we did, we do not have order block inside the order flow. So after marking my order flow, I am going to check if I have order block. So it's going to determine where my entry will be. So yes, there is order block. As you can see, we have an order block here. Okay, a very strong order block. A very strong order block. Okay, a very strong order block that fits in into all our, you know, category, right? This candle did not come below this low. It has fair value gap. It swept liquidity. Can you see a sweep of liquidity? This is also a strong order block that is supporting it. Yeah, you can see that it's very close. It's supporting this candle low. Is actually supporting it. It's like, you know, a big man carrying a small weight. So it's really supporting this. So my entry will be from the order block now, not from this order flow. So it's going to be a buy. All right, so just here, and then my stop loss will be below the order block. Okay, something like this, or below the order flow. Here it is close. The end of the order block is closer to the order flow. But if it happens that the order flow is wide, like in this case, let's say for example the order flow start from here, okay, my stop loss will still be below the what, order block. Okay, so just need to explain that. All right, so my stop loss will be below the order block. All right, and as I always say, 1:5. You can do 1:3 or 1:2, right? But if you are trading Profirm, you know, you can just quickly tap your meet your profit target. So this is more than 1:5. All right, very good entry. You can see that, very good entry. Okay, so your first success begins from your 4 hours time frame, where you mark your POI from. All right, that's where the success starts from. If your point of interest from 4 hours is wrong, your entry is going to be wrong as well. So you can see this, that this was what, successful, and price still pushed to the upside. Now we have another look at this point. This is our inducement level, where we first take our entry from, and here when price is coming back to this area is also a point of interest. So I will just mark this. All right, and we'll see how price behave here. Okay, because we have it here from the origin as a point of interest. All right, so we'll just look at how price behave there on 15-minute time frame. On 15-minute time frame, if it gives us an entry, we enter. If it doesn't, we don't enter. So we use the same entry model, the same entry model. So this might be the last example. I really love to do maybe like 2 more. Looking for this guy. Okay, yes, this is it. So let's look for how price behave. Okay, you know, we are looking for a sell from that region. So this is our POI. This broke structure, this broke structure. So this is our change of character now. Okay, that's the change of character now. All right, now we need to look for order flow. So this is going to be my order flow. This is my order flow. This candle here is my order flow. Okay, why is it my order flow? Because it is the last pullback before this break of structure. Now, does it have fair value gap or order block? No, because it's the only candle. So that means I'm taking my entry from the beginning of the order flow. From here, take my entry, stop loss a little bit above the order flow, and then 1:5, or you can do whatever you want to do. You can see this close to 1:6. You can see that this is 1:6. Okay, so that is how to trade or to use my entry model, right? You just need to understand order flow, how to draw your order flow, and then you look for order block. All right, so I'm going to end this video here. I believe that with these 3 examples, right, you will be able to make a very good decision in the market. All you have to do is just to see the video, over and over again till you capture and understand what the market is doing. Thank you.